Okay, guys. In this video, I'm going to do a breakdown of the model that I'm going to be using for the 1K to 1 million challenge. Okay. For those of you who are not aware already, I have been mentioning for a while now that I'm going to I'm going to start the challenge. I'm going to get an FTMO 200K account and aim to make $1 million in profit from that account. Okay, how long this is going to take, like I said, I don't know. I have made a video previously on this. Okay, you can check through my channel and watch the first video. Okay, so this video is basically to do a complete breakdown of the model that I'm going to be using to pass the challenge and to trade the account eventually. Okay, so this model is called the one shot one kill model. Okay, OSOK model, OSOK, one shot one kill model. And the model is basically to catch the weekly expansion. Okay, to catch the weekly expansion or the expansion for that week. Okay, it's a short-term trading model where you take a trade on Monday or Tuesday or Wednesday, and you intend to hold it for the rest of the week, okay, all the way to like Friday, okay, depending on when price reaches the drawn liquidity for that week. All right. So this video is going to cover the actual setup, how the setup looks like. It is also going to cover the trade management. It is going to cover the weekly bias a little bit. It's going to cover the entry techniques, the stop loss placement, break even rules, take profit targets, and all of that. So I'm going to cover everything in this video. Okay. So this is an example of the one shot one kill model. Okay, where you take a trade here, assume you take a trade on Tuesday, on Wednesday, and you hold it. Okay, you hold it all the way till the till Friday, till the end of the week. Okay, so the one shot key is usually framed on the higher time frame bias, is usually framed on the higher time frame PDRA. In this case, this is the higher time frame weekly order block. Okay, after filling a higher time frame fair value gap. I didn't mark the fair value gap here. Okay, but that's usually the premise on which the trade is going to be framed on. Okay, this is last week model. This is 2 weeks ago. Let me show you that of 2 weeks ago. Okay, so this is 2 weeks ago. You take a trade on Wednesday, you hold it all the way until Friday, until price reaches the drawn liquidity. Okay, so you can probably even hold it till the following week until price reaches the eventual target. Okay, so this is the one shot one kill for last week. Like I mentioned, you take a trade from here and you hold it all the way until Friday and you keep adding to your position. So this is the model I want to use to pass the challenge and for this 1K to 1 million challenge. So to start with, the first thing is to do a top-down analysis, at the beginning of the week, from the monthly to the weekly and the daily time frame and even the lower time frame. Okay, so I have all of this outlined on my trading plan. So I'm going to be using my trading plan to break it down, and then once I explain everything from my trading plan, then I'll come back to the chart to show examples, okay, to buttress everything I'm going to be saying, explaining from my trading plan. Okay, so let me switch over to Notion. Okay, so this is my trading plan. To frame the trade, the first thing I'm going to do at the beginning of every week is to do a monthly, weekly, daily analysis, okay, to arrive on what I can expect for that week, okay, based on the previous price action. So on the monthly time frame, what I tend to look for primarily is the um seasonal tendency, as well as I'll try to determine the possibility of a quarterly shift for that month. Like for some of you that are not aware already, price tends to change course every 3 to 4 months. Okay, so if price has been bearish for the past 3 to 4 months, there is a high probability that um there may be a shift. Okay, it doesn't have to happen, but there is a high probability that there may be a shift at the start of the new month. Okay, so this is what I do on the monthly time frame. I try to check, is there the possibility of a quarterly shift? Then I look at the interest rate differentials between the pairs that I trade. I look at the interest rate differential between EU and the USD pairs. Okay, now I'm not going to go over all this. If I'm going to go over how I do this in details, the video would be way too long. Okay, but the emphasis I'm going to place for the monthly analysis is the SMT divergence. Okay, I check to see if there's SMT divergence between the EU and GU. Okay, to have an idea of what is likely going to happen for that month. And I'm still going to show examples. Okay, so the most important thing I look for in the monthly time frame is the SMT divergence as well as the PDRAs. Okay, so I'm going to mark out the monthly fair value gaps. I'm going to mark out um the monthly order blocks and all relevant PDRAs on the monthly time frame. Okay, then I try to arrive on the monthly bias. Okay, then I move on to the weekly time frame to do a top-down analysis as well. I also check the relative strength between the pairs that I trade, EU and GU. I look at the COT chart, COT report, the commitment of traders report, to see, have an idea of what they are doing. Are they going long? Are they going short? Now, you may not be aware of what the COT report is, but maybe later in the future I'll make a detailed video on the COT report and how I use it. But if I'm going to start explaining exactly how I do all of this, the video will be way too long, and the focus of the video is going to be mostly based on entry techniques, how the trade is framed and entry techniques. Okay, so this is basically what I do. um then on the weekly time frame, I check, okay, what's price doing? Is price consolidating? Is it retracing? And I mark out the PDRAs to identify key price levels. So the most significant thing here for me is the COT report, the SMT divergence, and the PDRAs. Okay, the PDRAs, once I mark out the PDRAs, because the PDRA for that week is generally going to be the draw on liquidity. For example, if there is fair value gap on the weekly time frame, the weekly fair value gap is going to be the draw on liquidity. Okay, so I mark out the PDRA on the weekly time frame and I arrive at a weekly bias based on the above. Okay, the COT reports, the SMT divergence on the weekly time frame, as well as the PDRAs. Okay, because at the end of the day, the PDRAs would serve as the draw on liquidity. Okay, so once I have a weekly bias based on what I think the draw on liquidity is going to be, then I also do the same analysis on the daily time frame. Okay, so I analyze the commitment of traders report. Okay, I check the open interest chart and I determine the institutional order flow on the daily time frame. I want to see what is happening. Up close candle supporting price, down close candle supporting price. I want to see what the profile is on the daily time frame. Okay, and based on this, I also arrive on the daily bias. Okay, so maybe sometimes in the future I would create a separate video on weekly and daily bias, okay, specific things I look at to arrive at that, okay, but generally this is a summary of everything. Okay, at the beginning of the week, I ask myself these questions. What is the market most likely going to draw towards? Is there a fair value gap? Is there an imbalance or liquidity void higher or lower? If any of this is higher, okay, then my bias for that week would be that price will drop to that fair value gap. Okay, if it is lower, then my bias for that week would be that price is going to drop down towards the fair value gap. Okay, so this is generally what sets my initial bias for that week. Okay, now confirming the weekly bias. Okay, the way I confirm my weekly bias is I wait for Monday price action to happen. So generally, Monday's price action is going to act like the initial range for that week. Okay, so once Monday price action has played out, then to I wait for Tuesday and Wednesday to take out the Monday's high or Monday's low depending on if I'm bullish or bearish. Okay, so if I am bullish, I'm going to wait for price to trade down on Tuesday or Wednesday to take out the Monday's low or the Tuesday low if it is happening on Wednesday. And at the time that this is happening, I'm going to be comparing the lows on the two pairs that I trade, EU and GU, to see which one will fail to make a higher high, okay, to see if there is going to be some kind of SMT divergence. But in other words, if one of them is taking out the Monday's low and the other one is failing to do the same thing, that is an SMT divergence. That is a crack in correlation between those pairs, and that for me would confirm that my initial bullish bias for that week. Okay, so I'll be looking to take a trade when that happens and hold it all the way till Friday. Okay, I may take partials, but I would always look to add to the position as price trade towards the next draw liquidity for that week. Okay, so this is basically how I confirm that. Okay, so now emphasis on this: when price trades below the low that forms on Monday or Tuesday, I want to see an immediate instant reaction away from that low. Okay, so this is very important. This is extremely important. And I want to see price trade above a previous session, a previous daily, or a previous weekly high. When this happens, this is when the algorithm that delivers price, IPDA, switches immediately to a buy program to offer higher prices. So that bias is confirmed immediately after price trades below an old low, reverses immediately, and then trades above a previous session high or a previous day high or a weekly high. I'm going to show you all of this on the chart, all right? But you don't need to wait for this confirmation to enter a trade. You can enter the trade immediately you see the SMT divergence and hold until this happen. When this happen, you can know for sure that your bias is right. Okay, I'm going to show you all of this in the chart. Okay, I'm going to show you multiple examples on the chart. Okay, so that's how I confirm my bullish bias, and then vice versa for the bearish bias. Okay, so instead of a low, I'll be looking for price to trade above a daily, a weekly, or a session high and reverse immediately, instant reversal. Okay, and then trade below an old low or a session low, a daily low, a weekly low. Okay, when this happens, this is what confirms my bias for that week. Okay, now for my daily bias, of course, based on my weekly bias, I'll be expecting the daily bias to do the same thing. Okay, the way I kind of like confirm my bias for the daily is to look for SMT between the pairs, as well as wait for price to trade up above the midnight open price, um, or during London open kill zone. So if I am bullish for that day, I'm going to wait for price to drop down below the midnight open price, and that is where I'll be looking to go long, and I'm going to hold it, for the rest of the week while adding more to the position. Okay, so Same vice versa for bearish scenarios as well. This is a mistake. One of these should be bullish. I'm going to correct that later. Okay, so once I arrive at my weekly bias, okay, before even going into the daily bias, I'm going to look at the weekly profile template. Okay, the weekly profile template that ICT um, produced in his 2016 core content. Okay, it is on YouTube. You can watch it. You can um, go on to watch it from there. I think the profile is in month 6 or month 7, I think. Okay, I can't remember specifically, but it's either month 6 or month 7. Okay, so once I arrive at a weekly bias, okay, then I will look at, okay, if we are bullish, I look at the bullish weekly profile. If we are bearish, I look at the bearish weekly profile. Okay, so I'll be looking for price to form the high. If I'm bullish, I'll be looking for price to form the low of the week. Then I'll be using this profile as a guide. Okay, so I'll look at the economic calendar as well, and based on the economic calendar and based on where the PD arrays are on the weekly time frame, I'll be looking to see which of the weekly profile is going to unfold for that week. Okay, so if I think that Tuesday is going to form the low of the week, I'm going to be looking at this profile. Okay, so generally you wouldn't know which one will play out. Okay, now there are multiple profile. There is Wednesday low of the week, there is Thursday, Wednesday. The profile could be like this. Okay, and there are days you expect which one. Okay, there are days when one would form over the other. Okay, um I don't want to, again, I don't want to go through the whole process of explaining all of this, but I promise that sometimes in the future I'll make a separate video to break down the weekly profile templates. Okay, but generally the idea of the weekly profile templates is that every week one of these profile is going to play out every single week. Okay, one of these profile is going to play out, and for most of the weeks, Tuesday or Wednesday will usually form the low or high of the week if we are bullish or bearish. Okay, so this is the profile. I'm going to look at this profile and I will try to take a guess. You wouldn't know which one will play out at the start of the week, but once it begins to play out that week, you can pretty much know um the one that is likely to play out for that week. Most of the time, it is either Tuesday low of the week, Wednesday low of the week, or consolidation Wednesday reversal or consolidation micro rally. Okay, it is either of these three. Consolidation midweek rally. Okay, this if you are bullish, price rise up on Monday, Tuesday. On Tuesday, we have a rejection, we have a move downward, then rally after that. Okay, so what I would just tell you from this is that expect Tuesday or Wednesday to form the low or high of the week. Okay, if you are bullish, expect Tuesday or Wednesday to form the low of the week. If you are bearish, expect Tuesday or Wednesday to form the high of the week. Okay, so this is generally the most important thing I think you should focus on. Okay, so but let me just talk briefly a bit about when to expect some of these templates. Okay, for um Wednesday weekly reversal, this one particularly, the Wednesday weekly reversal, when price is trading below an old monthly or a weekly low, this is what usually unfolds. Okay, an old monthly or a weekly low, this is what usually would unfold. Okay, and for most other days it will be one of these two, this or this. For FOMC or non-farm payroll week, it is usually seek and destroy. Okay, this profile. All right, so but for the week that I'll be trading, I'll mostly be looking for classic Tuesday low of the week, Wednesday low of the week, consolidation midweek rally, or Wednesday weekly reversal. Okay, one of those four. Those are the ones that I like the most. And those are the ones I'll be looking to unfold. I don't like seek and destroy. Okay, um you don't want to take a one shot one kill during seek and destroy. Okay, but if at all you would, you'll be looking to take the trade on Thursday, not Monday, Tuesday, or Wednesday. Okay, because usually price would be forming some kind of zigzag pattern for that week. So you want to avoid taking one shot one kill on when you see this profile is unfolding, and you tend to know when it will unfold. It is usually during FOMC or NFP week, the first week of the month, or during NFP weeks. Okay, but generally I try to assume that all these other profiles are non-existent. Okay, I tend to only focus on Tuesday, classic Tuesday high of the week, classic Wednesday low of the week, consolidation midweek rally, and even this. Okay, I sometimes try to look for this, but generally I try to avoid it. Okay, I try to avoid them. Okay, so once I determine, let me just do a little bit of a recap. Once I determine what my bias is for the week, I will look at all these templates based on where the position of the profile is. Okay, depending on where the position of the profile is, depending on where the position of the weekly PDRA, where they are on the chart. Okay, then I'll try to take a guess of which of this profile is likely going to play out for that week. Okay, and once it begins to play out, okay, for example, once I see that okay, it is this profile Wednesday low of the week that is playing out, then I will look to frame a trade on Wednesday and hold it all the way to Friday. That is the one shot one kill. Okay, if it is Tuesday low of the week, I'll look to take a trade on Tuesday and hold it all the way until Friday. Okay, no, there is a drop here, but generally I want to hold it all the way until Friday. Okay, so um once I figure out the likely weekly profile, or the weekly profile that is likely going to unfold, then I'll be looking at the classic buy or sell day template, okay, which is this. So if I am bullish, I would look for price to trade below the midnight open price, look for some kind of SMT divergence, take my trade there, and then a rally for the rest of the day. And I'll be looking to add to my position maybe during New York, during London close, and um, hold it all the way to Friday. Okay, so this is the profile I'll be looking at when I am ready to take that trade. Okay, usually on London Open. Okay, so and then it can also be London swing, not this. It can be London swing to New York reversal. Okay, sometimes the profile will be this. Okay, for example, if we are bearish and price has not yet gotten to the PD array that we are working with, London open or London kill zone can push higher into that array, and then we'll see a reversal from there. So one of these 6 daily profile will pan out for that week. Okay. At the same time, I don't want to go through the whole process of explaining each of them one by one to know which one is likely going to unfold. But just know that generally the classic buy or sell day is what will unfold. That is what will kickstart the one shot one kill setup. That is what will kickstart it. That's what will start it most of the time. Okay, if this does not start it, then it usually would be London swing to New York close reversal. This, okay. So and the way I tend to know which one is likely going to unfold is if price is yet to get to the POI, the fair value gap, the other block that I'm working with, then I would expect that London open Q zone should expand higher to reach for it and then reverse and continue lower for the rest of the week. Okay, that's pretty much what I tend to expect. And um these other templates can also unfold, but what you will see most of the time, like I said, is this or this. Okay, so on another video I would explain all 6 templates, when you can expect which one to unfold, and how you make an entry. I'll keep that separate from this video. Okay, now this is the core of it. Okay, this is the core of it. This is where I make my entry after doing all my top down analysis, after building an expectation of what is going to unfold for the rest of this week. The entry model, this is the most important one. Okay, now I have three entry model. Either I use the fair value gap, I use a turtle soup, or I use a breaker. Okay, I'm going to show you all of these on the chart. I'm going to show you multiple examples of this. Okay, so fair value gap, the one I like the most, okay, is this turtle soup entry. I love this one. It is the risky one among all of them, but because you don't have any confirmation. But generally, if there is SMT divergence, this is when I use turtle soup. I like this because it is an aggressive entry, but I love it because I don't tend to miss an entry. But the fair value gap, sometimes if I'm waiting for price to trade into the fair value gap, sometimes price just wouldn't. It wouldn't. And the breaker as well, sometimes price will not. Okay, and sometimes you get confused as to, okay, should I enter at the breaker, should I enter at the fair value gap? Okay, so that's why I like to buy or sell into turtle soup when price is trading above the previous day high or above Asia high. That's when I like to enter. Okay, because I tend to enter early, and that means I can break even early. Okay, so for my risk parameters, I use just 1% per trade. I said just. Previously, I used to use 0.25% because I've been a scalper. I've mostly been scalping and day trading, but I'm moving away from that primarily to free up time for me to do other things. Okay, I got into trading not only because of the financial freedom, but also because of the time freedom. Okay, so I am shifting to this short-term trading method because I want to free up time. I don't want to be trading all the time. I don't want to be in front of the chart all the time. I want to take one trade on Monday, Tuesday, hold it for the rest of that week, add more to my positions, and scale out. Okay, as the trade is playing out. Okay, that is why, and I figured out that 0.25% might not be ideal for that kind of trading method because it will be too low since you are not taking a lot of trades, you are not taking multiple trades per day, unlike when you are day trading or you are scalping. Okay, so that is why I change my risk parameters. I'll be changing my risk now. All of these are still, I've never used 1% since I have been trading a funded account. I have never. Since I pass my account, even to pass it, I use 0.25% per trade. Okay, but because I'll be taking less trade per week since the one shot one key profile only forms once a week. Okay, 1% is a decent amount of risk to use. Okay, so and if I have a losing trade, I'm going to cut my risk into half until that loss is recovered. Okay, so I'm going to use 0.5% if I have a losing trade. And if I lose that one as well, the next trade I'm going to take will be 0.25%. Okay, so I'm going to take a maximum of 4 trades per day, one main trade. I'm going to explain all of this on the chart, of course. One main trade and 3 pyramid entries for that day. And all pyramid entries will be closed at the end of the day. The main trade, I'm going to hold it. Maybe I might take like 50% profits, okay, which I've explained here. So I'm going to take 50% profits on all positions at the PDR rate that aligns with 3 to 4 standard deviation of the Asia range. I'm going to explain this on the chart, so don't worry. And all pyramid entries will be closed at the end of London close kill zone at 12 a.m. New York time, or at any PDR rate that aligns with 3 to 4 standard deviation of the Asia range during London close kill zone. Okay, so let me just get into the chart. I'm still going to come over to stop loss placement and break-even rules and the risk parameters as well as this model on the chart. So let's go back to trading view so that I can explain this in detail using examples. Okay. All right. So I'm back to trading view. Um, so I'm going to use the one shot one kill model for last week as an example. Okay, and I'll also go over the one for the previous week. Okay. So to start the week, let's just assume that no, this is Monday. This is Monday. You can see this is Monday, this is Tuesday, this is Wednesday, and this is Thursday, and this is Friday price action. Okay. So Monday all the way to Friday. Okay. So the one shot one kill, this is Wednesday high of the week. Okay. So the profile here is Wednesday high of the week. Okay. So let me show you again from my journal. This Wednesday high of the week, where is it? Weekly profile. This is bearish. Wednesday high of the week. Okay, so this is Wednesday high of the week. This is what unfolded on GU last week. We didn't have this drop down. Okay, sometimes you won't get this drop down. Sometimes all you are going to have is price just shooting up without this drop down that formed on Monday. Okay, the important thing is that when is a high or low of the week going to be formed. So that is the profile that unfolded for GU last week. Okay, so back to trading view. What will happen generally is Monday might just consolidate. Okay, so if you are trading the one shot one case, it's always best to wait till Monday had price action has played out. Okay, you want to wait till Monday price action. You don't want to trade on Monday. If I thought you would trade, then maybe you can do some scalping, but I won't be scalping. I will instead be focusing on ES. Or I might not just trade at all. Okay, that's the essence, that's the goal. Okay, so I'm gonna wait till Monday price action is over. Of course, this is the weekly order block. Okay, we have fair value gap around here. That price also filled. Okay, so I'll be looking, okay, what is happening on what has happened on Monday. Okay, Monday tends to be like the Asia range, like I said, tends to be like the Asia range for that week. So just imagine that this is Asia range. Okay, so the next day you want to see a sweep of the Asia range and you want to see if a short setup will form. So this particular day when price took out this high, what you are going to be checking is we are going to be checking EU as well. Okay, is there an SMT divergence? Okay, on that particular day, there was no SMT divergence, but I was still stubborn. I tried to take a trade here, thinking that the one shot one key will start playing. It has already filled the fair value gap here. It was yet to trade into the body of the weekly order block, but it has already touched the week. Okay, the week of the weekly order block. I don't want to go to the weekly time frame to show you this, but just assume that I've marked that level on the weekly time frame. Okay, this is the body of the weekly will be on the weekly time frame. Okay, so we can see that price traded above Monday's low, Monday's high. Right then is when I'll be anticipating that the one shot one K model is going to play out. Okay, so I'll be comparing EU and GU. I'll be looking to see um if there is SMT divergence. Okay, but there wasn't on Tuesday. Okay, so I wait. The next thing, you wait till Tuesday price action has concluded. Okay, and this was when I posted on the Telegram channel that I'm expecting GU to form the high of the week and then EU to form its own high on Tuesday. So I said the high is already in. Immediately I saw this, I said that the high is already in for EU, and I expect that GU would form its own high the next day. So my plan was to take the trade immediately when I see the SM2 divergence, but that day I woke up late. Okay, I woke up late and price was already dropping here, and my plan was to enter at this fair value gap, but I didn't get an entry. It didn't get there. Okay, instead it rejected from the breaker. Okay, you can see that this is the breaker. Okay, you can see the SMT divergence here. You see that GU made a higher high while EU failed to do the same thing. So generally my plan for that day was to enter the trade, enter both EU and GU immediately when this is forming. Okay, that is my plan. My plan is to take both trade immediately when I see this forming. Okay, but I missed it. Okay, so this is the turtle soup entry that I showed on my trading plan. This is turtle soup. Immediately price is trading above the previous day's high, and the other pair fails to do the same thing. That is an SMT divergence. That is a confirmation in itself. The entry may be aggressive, but the SMT is still a kind of confirmation. So you are entering right there, okay, and I'll use a 30 pip stop loss. So this is the plan. If I'm using turtle soup entry, my stop loss will be 30 pips above the high. Okay, so if I'm entering here, my stop loss would be 30 pips above this high. Okay, somewhere around here is where I'll place my stop loss, right? Above the high, the previous day high. Okay, so that is my plan. That is um how I'm going to enter if I'm using a turtle soup entry. If I'm looking for more confirmation, I'll wait for price to trade below a short-term low. You can see this is a short-term low. I'm going to wait for price to trade below the short-term low, create a fair value gap, and I will enter at the fair value gap. Now, if price takes out the previous day high, a better entry would be to enter at the breakout, because the breakout becomes extremely significant if it takes out the previous day high. So in this case, that was what happened. Price traded into the breakout. The breakout did not allow it to come back to the fair value gap. But I was stubborn. I was waiting to see it trade into the fair value gap, and it did not. Okay, and it started rejecting, and rejecting. Okay, so a fair value gap entry is to enter at the fair value gap somewhere around here. Turtle soup entry is to enter above the previous day high. As price is taking out that previous day high, if there is SMT divergence between the two pairs, that would confirm it, and then you can go short right there. Okay, so that is the model. And pyramid your entry. As me, I have entered here, this would be a pyramid opportunity. So if I'm pyramiding here, I will break even on my position here. Okay, so this is how you add to your position. For those of you that are asking on the setup, if I make an entry, this is why I like the turtle soup entry, especially when the trade is in line with the higher time frame order flow. This is a short trade, higher time frame is bearish. Okay, I like to enter at the SMP divergence at turtle soup, because once I enter at turtle soup, I'll be able to pyramid my position. Okay, so I would have break even on my position here, and I will look to add more at the fair value gap or the breaker. Okay, and whenever price retraces into an order block, I will look to add more. So that is my pyramid entry. But when I'm pyramiding my position, I won't use my full risk. Okay, I won't use my full risk. I'll use 0.5% as my risk for all pyramid positions. I'll use 0.5% for my risk. Okay, and I will look to close all pyramid positions when price, or close all pyramid position when price trades above when price trade into 3 to 4 standard deviation. Let me explain that. If you draw your fib from here to here, Okay, if you are looking for my fifth settings, this is it. Okay, this is my fifth settings for this. Right? So I'll be looking to close all my pyramid positions at 3 to 4 or even 5 standard deviation that aligns with a PD array. Okay, you can see this is an order block. This is also a fair value gap here. In this case, it is 3 standard deviation. Okay, so I will look to close all my pyramid positions at this 3 standard deviation, or if price is still trading down, maybe it looks like it's not going to respect this, I'm going to close all pyramid positions at the end of London close Q zone. Okay, I'm telling you, I'm going to manage my trades so that you know how you manage yours as well. Okay, so at the end of London close Q zone, I'm going to close all my pyramid positions and close 50% of my profits from the main trade, okay, which will be the first trade I enter. Alright, then I wait till the next day. I'll look to add more the next day. The next day here we see price traded above the New York high, broke down again, created fair value gap, entry right there immediately. So you can also enter turtle soup here when price is trading above this session high. This is the New York session high. Okay, you can enter there and use a 30 pip stop loss. Okay, so this will be like 30 pip stop loss somewhere there. Okay, so that would be an aggressive entry obviously, but you can also place your stop loss above another block. Okay, in this case maybe this other block. Okay, but generally I prefer to use minimum of 30 pip stop loss above that high. Okay, so once you wake up, and don't forget that you can only take your entry during the Q zones. Now this is Asia Q zone. You could wait till Asia or even take your entry in Asia. That's one thing I've realized with the one shot one Q. Once the algorithm kickstarts the buy or sell program in this case, like I said, price trade above, that's what I was explaining in my weekly bias. Okay, so what will confirm this short setup or the one shot one Q is when price trades above this previous day high or Asia high and rejects immediately without spending a lot of time there, and then trades below a session low, New York, which in this case is the Asia session low or previous day low. Okay, but you don't have to wait till it does that. Immediately you see this, you can be confident. Immediately price trades below the previous day low or a session low or a weekly low, depending whichever one, in the last 3 days, that is when the algorithm immediately switches into the sell program and continues to offer lower prices for the rest of the week. Okay, and price should not trade back above an old high. Okay, it should not trade back above an old high. For example, price should not come back up to trade above this high. Okay, if the trade idea is right. Okay, all old highs will be respected. All old highs would be respected. Okay, so that is my plan. Okay, at least I've done a breakdown of the entry techniques. You can either enter the turtle soup when price is trading above the previous day high or low, or enter the breaker that broke through the breaker that broke above the previous day high, or use fair value gap entries. Okay, and then whenever price retraces into an order block or fills the fair value gap all through the day, I'll be looking to pyramid my entries. And before I pyramid my entry, I must make sure that I'm already break even on my initial positions. Okay, so the next day, the first all pyramid entries will be closed like I mentioned at when price trades below 3 standard deviation of the Asia range. Okay, there are 3 things you can use. You can use open flout, you can use the Asia range, or you can use the CBDR range. But personally, I like to use the Asia range. Okay, so I'm going to be sticking to the Asia range. The algorithm can use any of the three and you wouldn't know which one is going to use, but I've decided I'll be sticking with the HR range for my own trading. Okay, so because I've seen that the HR range is more consistent. So you can see here that this is three standard deviation of the HR range that aligns with this order block and this untapped fair value gap. Okay, so then the next day you look to repeat the same thing. Okay, you wait for price to take out liquidity. Now when it does take out liquidity it can happen even during Asia or the previous day. It's important to refer to what has happened before London open Q zone. Here it has already taken the liquidity above the New York session high. So on this particular day I was waiting, I wanted to see price trade above Asia, but it did not. And one thing I've realized is that whenever there is an old low, okay, you can see this old low, whenever there is an old low like that, price will not trade above it in a sell program. Okay, and if it is a buy program, generally price will not trade. You can see from here to, you can see this low, you can see that price did not trade up above this low. Same here, this low, price did not trade up into this fair value gap. It rejected from here. Why? Because this low becomes a mitigation block. Okay, this becomes a mitigation block. So whenever price trades to those lows, generally it wouldn't go above it in a buy or sell program. When the algorithm has started that program, okay, when it starts to offer the lower prices, old lows like this that are obvious like this, price will not trade above them. So, I was telling a friend, we're discussing the price action. I was telling you that there's a high likelihood that price may not trade above this Asia high. But I was still expecting it and I missed the trade. And when it traded below here as well, I was still waiting to see if it will trade above it, even though I knew that it is likely not going to trade above it. So my trade executions last week was just, quite terrible. I was trying to avoid a loss. I wanted everything to be perfect, and I ended up missing on all these moves. Okay, I ended up missing on them. So for pyramid entries, if assuming you have entered here, maybe in Asia, or let's not assume you didn't even enter here. Maybe price broke below this old low with fair value gap, you can enter once the fair value gap is filled and your stop loss will be above Asia high. Or if you want to be safe, you can place your stop loss above this other block. Price should not take out this other block. Okay, so you could have entered here, you could have entered there, place your stop loss above this other block. Okay, so my stop placement generally will be 30 pips if I'm buying above an old low, above a session low. Okay, or I just look for an order block that is above current market price and I place my stop loss above it. Okay, the most obvious. Generally, I might have used this or used this. Okay, this would be the better stop loss. Okay, especially considering I'm using 1%. So, using 1% means I can be more generous with my stop loss. If I'm using 0.25%, my stop loss generally would want to be, I want to use a tight stop loss. But if I use 1%, you don't need to use a tight stop loss. So 30 pips above this high, above Asia high, or just use this as your stop loss. And then for pyramid entries, whenever price traces into an order block, this is an order block, all this candle, that's an order block, price traces into it, can enter there, stop loss above this high. This is another order block again. Price retraces into it during New York above a short-term high. Okay, you can see this is the order block. You can enter there, stop loss above here, traded down below an old low, fair value gap, order block, trades up into it. You can enter again, stop loss will be above here. So this is how I am going to be pyramiding my entries. Okay, and like I said, I'm going to take profits 2 to 3 standard deviation, 3 to 5 standard deviation below a PD array that has not been tested. Okay, either an order block or a fair value gap. You can see from here that this is an order block and this is a fair value gap right there. Okay, so I'll be looking to take profits at 4 standard deviation right there. I'm going to close all my pyramid entries, and I'm going to take 50% from this position, the first position, my main entries. Okay, I'll look to do the same thing on Friday as well. Wait for price to trade above a high. Okay, short term shift in market structure, fair value gap, entry right there, and you hold till the close of the day. This is the draw on liquidity, you didn't get there. Okay, so you can close maybe some of the positions and leave a small portion till Monday. Okay, because this is the ultimate draw on liquidity, the fair value gap on the daily time frame. Okay, so that this is the one shot one key for last week. This is what I want to be trading. This is the model I'm going to be trading for the challenge. Okay, um let me show you the one shot one key for last week and use that as another example. So this is Monday's price action. So you don't want to trade on Monday. Okay, you want to wait to see what price is going to do on Monday. Here we had that heavy drop that scared everybody, including myself, on Monday, and I said, "Oh, I'm not going to trade the GUP." Okay, and then price rise up, cleaned all this trend line liquidity, drops down, consolidate. No, this is why you want to wait for that setup on Wednesday or Tuesday. You can see from here as well how beautiful is this price action. Okay, it created equal lows. Okay, we have a tiny little fair value gap here, and during New York, price drove down into this other block, fair value gap. Right there is when you can buy. Okay, you can buy when this is happening. Okay, so because this is going to become a London swing to New York reversal. Okay, this is London swing to New York reversal, and traded up. If you go to the 5-minute time frame, you would see that price traded above a short term high. Okay, so let me, how should I go to 5 minute? Okay, let me show you on the 5-minute time frame. Um, okay, so you can see price traded below all these lows. Short term shift in market structure. Here there is no fair value gap. Another short term shift. This is a short term high. Fair value gap this time around. So you could enter here and use this low as your entry, or 10 pips below it. Okay, personally I'm going to be using 10 pips below the low of the day. Okay, and whenever there is a retracement into another block, or when price fills a fair value gap, our pyramid there rallies up, retracement into another block, pyramid entry, fills a fair value gap, pyramid entry, and I'm going to close all my pyramid entries at the end of London close, or a fair value gap that aligns with the standard deviation of the Asia range. Okay, and then the plan or the goal would be to hold the main trend, the main trade rather, the main trade for the rest of the week. So you can see that you enter somewhere here. This is Monday low of the week. This is, this price action is an aggressive price action. Under normal circumstances, Wednesday here would probably have been the low of the week. Either ways, we are looking for SMT divergence between EU and GU, and you can see it here. You can see that So we can see that EU made a lower low while GU made a higher low. Okay, so this is what confirms the one shot 1K for that week. Okay, so once you see the SMT divergence, you want to go long right here and you want to use 30 pips below the low of the day. Okay, so 30 pips entry there. This is the trade that we entered this trade actually. We entered this trade on Telegram channel and I had to close it because of this, it wasn't moving. It wasn't moving. My stop loss was on this red line. Okay, so it wasn't moving, it was just parabolating, and eventually it moved and we missed all these big moves. Okay, so this is classic buy day template. Okay, price drop at immediately at the midnight open price dropped below it, okay, during London open kill zone, and then once it is dropping, there are two ways you can enter. Okay, this is a short term low, that's there's liquidity residing there. This is um sell side inefficiency, buy side imbalance, sell side inefficiency. So once it fills it, you can go long right there. You don't need to wait till price gives you a setup. You don't need to wait till maybe there is a break of structure, fair value gap. You can enter as price is dropping. You can enter. Usually this will be like one standard deviation of the Asia range or the CBDR range. Okay, here you can see this is one standard deviation. Okay, this is one standard deviation of the Asia range. Okay, whenever this is formed, whenever you see price trading at one standard deviation, you want to check, is there a PD array that aligns with it. You can see from here, this is an order block. This is a 15-minute order block right here, and it also filled an imbalance. So you can go long there and use a 30 pip stop loss. Okay, so 30 pip stop loss will be somewhere here, yeah, somewhere around there. Okay, and then pyramid your entries. Once it breaks structure, okay, here it retraces into this breaker. This is a breaker. Price broke structure, retrace into this breaker, rally, fair value gap. You can pyramid your entry right there. Okay, New York setup, retracement, pyramid entry. Okay, you break even here, pyramid entry. Once you break this structure, fair value gap, you can pyramid again. Stop loss will be here, rallies up, and I'm looking to close my trade, like I said, at 3 to 5 standard deviation. You can see from here, this is 4 standard deviation. Okay, but before it reaches the 4 standard deviation, I would have closed all pyramid positions at the end of London close kill zone. So this is my plan. This is how I'm going to be trading it. At the end of London close kill zone, I'll close all pyramid positions. I'll take 50% from my first position. Okay, and same thing on Friday. I'm looking for, this is London swing to New York reversal. Okay, so once I see price rallying up during London Q zone, that already tells me that price is going to drop. Okay, because this is a Judas swing to the upside, that means price is going to drop. So once I'm seeing this, I'm taking majority of my position off, but I also know that price is still yet to reach the draw on liquidity, which is the fair value gap. So I can leave some positions on um for the following week. So you can see that on Monday we consolidated and then Tuesday rise into it to now form the one shot 1K for the following week. Okay, so this is the one shot 1K model. This is a model that repeats once a week, and this is what I'm going to be trading um for the 1K to 1 million challenge. Okay, so let me show you a few more examples from the previous week. You can see my network is not good enough. Okay, so this is for the upper week. like I said, you wait for Monday's price action, you wait till price trades above an old high, and then you want to see an instant rejection from there. Okay, and you are going to be comparing um the high and the low on EU and GU for SMT divergence. Okay, here there was actually an SMT divergence. When you go into your chart, you see the SMT divergence. So price trades above it and instantly reverses fair value gap. You can enter once you see the SMT divergence. So generally, it is always advisable to start monitoring from a shark Q zone, because sometimes the setup will form inside the shark Q zone. So once you see this price trading above the Monday's high, this is Monday's high, this is also the previous Friday's high. Okay, once that happens and price trades below a session low, okay, or a previous day low or a previous day high, that confirms the SMT divergence. Okay, and here again, this will be a pyramid opportunity. The next day, you can see that what is wrong with trading view. What is going on with trading view? Okay. Okay, so you can see from here, this one is Monday high of the week. Okay, this one formed on Tuesday rather. This is Tuesday. You know, the um normal trading range closes 5 o'clock. Okay, it is not the midnight open price. It starts at the midnight open price but closes at 5 o'clock. That is what the IPD algorithm works with. Okay, so once you see this, can go long, you can go short rather for that week, and then you look to pyramid your positions. You can see how it keeps on dropping for the rest of that week. Okay, so every retracement into another block is an opportunity to add to your position. Okay, so you are holding it till Friday at the very least. Okay, you can see this is Friday's price action here. All right, so I hope you've learned something from this, and I hope I've been able to explain how I make my entry and how I place my stop loss. But let me just do a quick recap again on how I'm going to place my stop loss. Let me switch over to my trading plan again so that I can do a recap. Okay, stop loss. Again, these are the entry techniques I'm going to be using. Either I buy turtle soup, this is my favorite entry pattern. Turtle soup when there is SMT divergence, fair value gap, or breaker. Okay, the breaker is more ideal if the pair you are trading takes out the previous day high. So you want to look at the breaker, the last down close candle before the high is taken, if price is bearish. Okay, and vice versa for bullish scenario. So my risk is going to be 1% to be kept consistent throughout all trades. After every losing trade, risk will be cut into half until loss is recovered. Maximum of 4 trades a day, 1 main, and maximum of 3 pyramid entries, okay, or even 4 sometimes. Now, if 2 trades are lost in a row before securing any percentage for the day, I'm going to close the chart to prevent any revenge trading and wait till the next day. My stop loss placement, if I'm trading a sell stop read, okay, maybe turtle soup, I'm going to use 30 pips above or below the low in the case if I'm bullish or bearish. Okay, if I'm trading the first retracement into an OB or a breaker, maybe in the case of a pyramid entry, or I'm waiting for confirmation, I'm going to use 10 pips above or below the low of the day. Okay, the low or high of the day. Okay, and for pyramid entries as well, I'm going to use 10 pips above or below my POI. Okay, if I'm using another block, I'll use 10 pips above the other block. If I'm using a fair value gap, I'm going to use 10 pips above the high of the fair value gap. Okay, now once I have entered, I'm not going to move my stop loss so fast. I will not rush it, and that is why I've bolded this. The essence is to hold the trade for a long period of time for the rest of the week. Okay, so I move break even too early. All right, my break even rule is that at the end of London open kill zone, that is when I'm going to break even on my first position. Okay, if I'm able to pyramid an entry in London open kill zone, okay, I will break even on the first position, okay, and break even on the second position at the end of London open kill zone. Okay, so I will not pyramid my entry until I have break even on the previous position. Okay, so these are my take profit targets. I've explained this on the chart already. All right, so as part of my plan for the 1K to 1 million challenge, I'm also going to be scalping the 1 minute chart on ES, okay, on S&P, the morning session, the AM session, if a setup presents itself. Okay, but generally this I'm going to primary trading EU and GU, okay, and ES if it presents the setup. Okay, so um the video is already too long and I don't want to go over the ES entry. Maybe I'll make a separate video for that before the end of the week. Okay. Um so that will be all from me today. I hope to make a few more videos before the end of this week, especially the requested videos. A video on institutional market structure, video on weekly and daily bias, and then maybe I'll make a separate video to explain the intraday profile, when to expect them, as well as all these weekly profile, so that you know which one is likely going to unfold for the week. Okay, if you have any question, feel free to ask in the comment section or drop them on the Telegram channel. Okay, so I'll see you in the next video.